Hey, it's Mac with PriceActionTradingSystem.com, and it's Thursday. It's May 5th. This will be our chart lesson for the day, and this is going to wrap up our week. As you know, no chart lessons on Friday, so um, what a day to wrap up on. Is beautiful as yesterday was. Today was, well, there's two ways to look at today. Today was a great trading opportunity, especially the early morning into about 11 o'clock. After 11 o'clock, not much happening. A lot of sideways, high volatility, hard to decipher stuff. But that trend on the way down was one of those trends that you just kind of try to wrap your arms around and hang on for dear life and get as much out of it as you can. And we had that same thing going up yesterday. The, the negative about today is that it was a very bearish day. We didn't get any follow through buying yesterday. In fact, we turned on a dime and went straight down again. The one light at the end of the tunnel is you notice we did close inside the support. So the support's still holding, and we've made a higher low so far. Um, I don't know what to think here. Maybe we'll get that triple test and we'll rally out of here and go higher. But honestly, just my gut feel, this support's still holding, and this is a daily chart, so it could take a little while. But my gut feel is we're not done to the downside. I really thought maybe we'd get some follow through, and we might put in at least a short-term low, and we'd get some kind of even if it's just a bear rally, we'd get one here. But so far, it hasn't happened. So that's why you never go with your gut feel. Go with what the market shows you. And again, it was a great trading day as far as day trading goes. And as a day traders, we don't care which way the market goes. We just need it to trend and trend strongly like it did yesterday and today. Now, yesterday it trended strongly up all day or most of the day, and today it trended strongly pretty much most the at least the first half of the day. The latter half of the day was not so great, but I mean, we had some great movement and great trending, and that's what you want to see because it just makes easy trading. Uh, However, when it bottoms out and then starts going sideways, and you get that high volatility sideways type stuff that we'll look at in a minute, it gets a little harder. But in the big picture, I'd like to see this market going higher just for my retirement accounts and my long-term investments and things like that. So, but really, as a day trader, as long as we get movement, we can make money. We don't care where it goes. So that's just my personal opinion. I like it going higher instead of lower, because it benefits me much more if we're trending to the upside than trending to the downside. So that's the reason I feel that way about it. And for the overall economy in the country, and just for the general well-being of American people and anybody that trades for that matter. You don't have to be an American to trade. You could be living anywhere overseas and trading, and you may not feel like it affects you, but when the U.S. does bad, it hurts the whole world. It really does. So it's just not a good thing overall. I'd much rather see the market going higher. But anyway, let's flip over to the intraday chart, go through the trades because there's quite a few of them, especially early on, and then we'll wrap up this day and we'll wrap up this week. Okay, here it is, and you can see this really strong trend down. It started out in this dark blue, and then it kind of folded over into this yellow. And they even found a shorter term one within the yellow one. I mean, we couldn't even get back to the trend line. That's how bearish this thing was. That yellow trend, prices just kind of hugged both sides of the yellow midline all the way down until we finally got a break, a new low. Then we chopped sideways for a bit before breaking a little bit lower. There's somewhat of a downtrend here. You can see the yellow channel. But still, this is still a lot of sideways stuff here, and you probably needed both patterns to trade it. But I mean, you got one trade off the trend line, and this one you didn't really need the yellow channel, so it gave you one trade maybe. Otherwise, you were better off just going with this shorter term stuff here like usual. So anyway, let's zoom in. There's quite a few trades on the way down here, and then you can see from there on it was real sparse. So once we get through with the downtrend, it's not going to take long to get through these trades. But let's zoom on in here where we can see something. There's a lot of price action here, so I'm going to have to really zoom in. Okay, 7 o'clock came right in here. That's usually when we start trading, so that's the reason I usually start talking about trades around 7 o'clock. Much earlier than that, it's a little bit too early and there's not quite enough volume. You could probably safely start trading 6, 6:30, some days 6, but definitely 6:30 if you wanted probably. But usually it's around 7 o'clock. Lately, you've had to just kind of sit here and wait a little bit. It's not always, usually your best trading is from 7 to 9 o'clock or so. But you can see today you had to be real patient before we really got a setup. I mean, we're trending and we're moving lower here, but there's just not any setup. So, but anyway, that's for another day. Let's get through these trades. And right here, we're just looking at, we would have just drawn you already had a short term. I don't have it on here, but let's just go ahead and put it on there. You can see this short term channel. We got a break in new low, and then we're just going sideways. Instead of rallying, we just went sideways, which usually that means you'll probably get another leg down. And so I would have at least been, once we started going lower, I would have at least looked for a measured leg down to about here at a minimum. And you can see we bounced a little before that, then we just shot right on through it and kept going. So it didn't even really affect prices in the least, which tells you things are really bearish. So, but the 7 o'clock hour is right here, and we're just in this range here. And notice you get you test it once, twice. This is a triple test, relatively bearish bar. If you look, there are 2 legs back up there. That's a good place to go short. And I draw my blue trend line off that and see what happens. And you notice it does hold as we come across here. I would go ahead and find this short term one too. And unfortunately, you can't go short right in here. And we just kind of drop on down, and I don't see anything down through here that I think is worth risking. And we do get a close outside a new low, and then we're just going sideways again. So we really just have a repeat pattern here of what we had right over here. And we're running across here. We get the failed breakout, and that does really confirm that yellow trend line. But unfortunately, your signal bar is no good there, and then the bottom just drops out of it again. So once again, you just don't really get a good setup here, and we're just continuing to go down. We came back into this blue trend line, and it kind of came back into play and started back up again, so to speak. And you don't see that often, but it happened today, and that's usually a sign that, hey, things are very bearish. So anyway, we come over here and you get this. That's just a first entry right there. And really the way I looked at this is we tried to go higher there and failed and turned down. So this was just kind of a lower high. The key is you got to have room to scalp out. I think it's just enough room to get out of there, but you might have had to use a limit order and let it back up some, or let it break. Really, this broke higher and then turned down is why I liked it in such a bearish market. So when it broke lower there, you might drop a limit order a tick or two higher just to be sure you got enough room. Just make sure you got enough room there. And I can't remember if there was enough room or if it was right at 5 or 6 ticks. I can't remember. Looks like it's 2 points there, so you would have had enough room to get out on that one. But if not, the only way you could trade that is if you let it break lower and then drop your limit order high enough that you do have room to get out, and then see if you get filled on it. If you don't, then don't take the trade. So anyway, we dropped on down, and then you get a first entry, second entry right off that original key entry point. Very nice signal bar. Same thing again, first entry, second entry, right off that key entry point, nice signal bar. Drops on down, finally bounces here. And notice we got a channel working up here, and you get a break, and it can't even come close to making a high. That's telling you, that's a signal that, hey, all we can do is go sideways here when we should be going up. We should be coming back to the yellow trend line after being here. And notice that we just start a new trend. That's a sure sign that, hey, this thing is bearish. So just any good setup, get a hold of it, try to get a runner, and try to hold on as long as you can until it plays out or you get stopped out on your, tightening your stop up, moving move your stop along with the trading. But notice we made a new low, first entry, second entry right there. Look how bearish that bar is. Right off that key entry point at the EMA, just go short there. There's a lower high here. I didn't mark it, but technically you could have entered there too. I'll at least mark that one green. I would have liked it better if it broke higher, since it turned out to be kind of an inside bar. It does have an equal high, so you could take it, especially in a bearish market like this. You're just looking for a good reason to get on. Then of course you make another first entry, second entry, and this one I think is the one that you only had 5 ticks, so it would have been like a 4-tick failure, I think, if you used a stop to enter. Yeah, you can see there's 5 ticks there, and you need 6 ticks to scalp out with 4. So if you take this one, you definitely got to have enough room. So when it broke lower, don't go short with a sell stop there. You have to use a limit order, and I wouldn't just give myself 6 ticks. I'd try to get at least 7. So then you got a little spare room. Yeah, you might miss the trade. That happens sometimes. But you can see this easily came back and would have filled a couple of ticks back in that bar before it goes lower again. And that's what you're shooting for. And technically there's a failure here, but it doesn't get back to the EMA. It's so close to the lows. We're kind of working sideways. It's not really taken off yet. I'd be very leery of that one. And notice it does end up taking off, but it's just not a good setup. Then we bounce here. You get your first break or close outside convincing. And unfortunately, that's just a first entry. So wait on your lower high. This actually breaks higher and turns down. You could go short on an engulfing bar here on a second entry, right at that key entry point being the first break, especially in a market this bearish. But I don't know if I would wait and go short. I don't think that bar, it may be in the lower third, but it's real close. It's not a great set. It's not a great signal bar. So if I waited on that to close, I don't know that I'd take that trade. You still could. I think it probably closes in its lower third, but it's borderline. And when you see that much stem, especially closing above the EMA, you got to wonder. But you can see this thing's just weak. And then we bounce back again, and really you could look at this as a double top, first entry, second entry. So I looked at this as a failure, but there's a hidden second entry long there, and when it made this lower high and broke higher again, and then turned down, there's a little bit of probably a long trout. People are trying to probably picking bottoms, lows all the way down through here, but this thing's bearish. Anything off that key entry point that's halfway decent, you just about have to take it. So, and then of course we bounce, and no setup on that signal bar, and so it gives you the clues that, hey, we're going higher, so just sit tight and wait. And notice we finally get back to the yellow trend line, and prices turn down off of it instantly. Unfortunately, there's no setup there. But we do come down here and get a first entry, second entry, another bearish bar on a second entry short. Just go short there and look at it go. I mean, these are just gimmies almost. And of course, we drop down here, and we can't get back down to this low, and we can't get back down to this low. And this thing's extremely oversold by now. So you could see some rallies. Even if we're going much lower, you could still see some rallies. And when you do, they're probably going to be volatile. So just remember that and be real careful from when you start to come up short on the other end like this. Notice how we couldn't get back down there, and we haven't got back to the low yellow side in a long time. So this one was just so bearish, it really was working in this channel. But once we had a break and a new low, especially with 2 legs down, you just got to be real careful. I'm not saying go long. You notice I don't have a single long marked in here. Don't even think about trying to go long. I don't care if you get the best setup you've ever seen in your life. Don't go long in a trend like this. You're just asking for trouble. Yeah, you might get lucky and you might get a little run, but the odds are prices are not going to run very far. You notice we're going sideways here, and you get a failed breakout. There's a hidden second entry there. If you don't know what that is, don't worry about it. It's a little more advanced. So, but notice we basically went up, pulled back. So that's your first leg, your correction, then you get the second leg up. So boom, there's a chance to go short. Again, right at the key entry point, very bearish bar, good ways away from the EMA on a failed breakout there. That's what you want to see. We drop down. There's actually another second entry short here. I didn't mark this one, because it's a little bit congested, but I should have at least marked that green. I don't know why I didn't. Maybe I was thinking about that one and just overlooked it. But notice the new low, first entry, second entry. It's right at the key entry point, right at this, we're back inside the range. It's an easy scalp. So I'm guessing that because we didn't have a lot of room back uh, to the EMA and the midline. Usually you don't have to worry about that on a range unless you see it hold, and it did kind of hold here. Notice how none of these bars could get back down. Of course, we came off the low, so we're trying to go back to the highs, and there's just a lot of selling still coming in. But you'd expect you'd probably get a scalp out of that. It's a little aggressive just because of the way it sets up. It's not a perfect setup by any means, but I'll mark it green. And of course, it bounces and goes higher, but I don't see there's no reason to buy here. And if you're just patient, in a few minutes, you get a first entry, second entry. So when it breaks lower below that bar right there, that's a failed second entry long, and off to the races. You get an easy runner on this, and boom. You only got to get a trade or two like this. One trade if you catch a runner. I mean, if you catch this runner and just stay with this trend, I mean, the trend itself is 45 points, but let's just say you stay until you get a close outside, and then you put your stop above. I mean, you might have put it above that one, so you might have got stopped out there at 26 points, but that's the first one that convincingly closes outside. And so if you put it above it, you don't even get stopped out. It just keeps going lower, and you probably get the whole thing. And then so this would have been the first one that closed outside after that, and so assuming you get stopped out there, you still got 37 points. I mean, it's just hard to beat that. I mean, you don't have many days you get those opportunities. So when you get them, take advantage of them. But yeah, I don't see any more entries down through here. This is too congested, not much room there. And then of course we're bouncing. Now we finally got a break of the green one and a new low, and we got a break of the yellow one and a new low. Notice I marked this green. Normally this would be marked blue, but because this day has been so bearish, it's dangerous even taking this reversal pattern, knowing that we've probably made at least a short-term low. Honestly, I think I would skip it and wait, but every one of these channels, the green one's played out here, the yellow one's now played out, and even this blue one on the way back down has got a break in a new low. And usually I won't even draw a trend line on these because we know what we're getting here, but because it's so bearish, I wanted to kind of see what's going on, and I drew that one. And you can see we've got a close outside and a new low on it. So every one of our downtrends has now given you everything you need to know that, hey, we could reverse. And so that's the only reason I marked that one green. But I don't think that I would take it, honestly. It's just too risky. And of course, we run up here, we get a break, move to a new high, and then we just kind of fold over into a more healthy trend here. But even it's a lot of choppy sideways. You get a break, a new high, and then we're just going sideways here basically. And I don't see anything in here really worth risking. Then we're in this tight range. There's nothing here I like. You got the failed break here, but there's too big a chance you could get another leg down and test that low again. So I just don't think you can go short out of or long out of there. And of course it runs up here. You do get another reversal here, but notice you're moving up. You get your first entry, second entry, but it's way too far away from the EMA. It just doesn't set up properly. So I don't see any way to get in this, and then we're running back down. This is one up here you might look at. Notice you got the break. You actually had a break here and a couple legs up, and then you get another little break higher. It turns down. There's a pretty good, that's a lower high where you have had another double top, basically off a double top, and you have that little trap there. So you might take that one to just saying, hey, I'll at least try to ride it back to the EMA. I didn't mark it, but this thing has been so bearish, you may take that trade. I'll mark it green. There's better trades, and that's the thing. And I try to tell people this all the time. You know, we're not just looking for trades. We're trying to make money here. Are you here to trade, or are you here to make money? If you're here to make money, you only take trades that you know for a certain are a sure thing. When people will come on the forum or they'll send me an email and, hey, what do you think about this trade? I know it didn't do this, this, or that, but I still liked it. What do you think about it? Well, if it wasn't a perfect setup and you got to ask me because you're not sure, then you shouldn't be taking the trade. I mean, it's okay to ask me just to learn. So I'm not complaining about you asking, but if you have to ask and you already know that there's some reason you're asking, so it's not a perfect setup, so don't take it. That's the key between a profitable trader and one that's just that's a good chart reader but can't seem to make money. They take trades that are too risky. Only take trades that are sure things. We're here to make money. We're not here to trade. You might only get one sure thing a day, but make sure that's the trade you take. You might have to sit here for hours, but we're here to make money. We're not here to trade. And if you're here for the thrill of trading, you'd be better off to go to the casino because your odds would be better. Gamblers don't make it in this business. Trust me. If you don't learn anything else from me, learn that the only trade you take is a sure 100% thing, at least in your mind. Now, your mind may be wrong, but if you don't think it's a 100% sure thing that you're going to get an easy scalp and maybe a runner out of your trade, the scalp is the key because a lot of them won't get runners. But if you're not 100% sure you can get your scalp, whatever you're scalping for, if it's 4 ticks or 8 ticks or 20 ticks, if you don't think you can get that, what you're trying to get out of it, then don't take the trade. It's pretty simple, but it's amazing how people cannot follow that rule. They're here for the thrill of trading, and that's where people send me an email and say, I want to add another trade to my trading scalp. Why? If you got a trade, if you got one trade that makes you money, that's all you need. Sure, it's okay to try to learn more, but usually they're wanting that other trade because they want to take more trades. And that's the wrong attitude. That's why they fail. So anyway, that turns out to be a really good trade. And then we're just chopping sideways again. It tries it again, and that kind of sets your trend line. But you don't really get another setup. Unfortunately, it goes lower without us. Then it's chopping along, then it runs back. And now it confirms that trend line right here. And by the counts, there it is, a first, second entry. And just looking at it, you can see a leg up, correction, a second leg. So it looks like 2 legs up too. And that's a really bearish bar. Normally, somebody'd say, what about this trend channel? Shouldn't I wait on that? Yeah, in most cases, but you can clearly see it overshot it right there. And it came down off the key entry point, a bigger one that it confirmed. So that's a pretty good setup right there. Take that trade. You get a runner here, and it continues to go lower. So that's a really good setup. And then we get another key, good signal bar, but it's just a first entry. And you might look at that. We tried to go higher there once, twice, 3. You might look at that as a triple test. It's stretching it. So, but there's a case to be made for it. Look how bearish that bar is. It's still at the key entry point. So, maybe it deserves a green. You got to, if you got a good enough eye to see that, maybe you take that trade. I'm sure there'll probably be better ones. Actually, this late in the day, that might be as good a trade as you get. But we come over here, we get a break, a new low, and then we correct. And once again, that was kind of the MO. We didn't get, from here on, we didn't get a lot of breaks and new highs. It's because the downtrend's kind of picked up steam again, and it's this yellow channel. And notice we just keep getting these overshoots, and then it reverses. And unfortunately, there's a reversal pattern here, but by the time it triggers, it actually triggers here, and it's not set up properly. And then if you say, okay, let's just overlook that little one, and by the time it sets up properly here, you've made a couple more swings up, and you don't have room really to scalp out there, so you can't take it. So no trade there. It drops on down. Keeps on going here, and you get a second entry short. It's actually the second entry triggers right there, but you could technically call that a little 2-legged correction and treat this like a second entry. But the signal bar is no good, and it's a shame because it's another nice move. And then here's one we'll probably get asked about. I don't know if it's, let's see if there's enough room there. You might have got out of that trade if you took it. I mean, these second entries are powerful. So there's a second entry at the key entry point, but notice we already had a break and a new low, and we're not even back to the EMA. So you got to be careful with these. And it looks a little sideways there too. I mean, technically, if there was plenty of room to the lows and we were still inside the channel, I'd probably say take that trade. But the way it sets up there, I'm not crazy about it. But yeah, if you took it, it worked. There is enough room to scalp out. It's close. It's real close. But in that case, maybe you take it. And there's actually another second entry right here. But by the time it triggers, there's a 2-bar matching low, and those are both small bodies with lots of stem, and there's 3 bars, so that's congestion. Just skip that. And then finally, you do get a better second entry here, and you're long. It's a breakout, so it's probably going to fail, even if only momentarily. There's a lot of room back to the EMA, which is probably going to at least come back and test that. So that's a nice second entry. And the only reason I made it green was because it was late in the day, and generally you probably want to wait on a lower high. But I mean, you can see we're trending lower again here, and so everything tells you this is probably going lower here. So I marked it green. It's right there borderline. You might say, hey, I think that ought to be red, and I wouldn't argue with you. But I don't think it's a perfect setup. The signal bar is very bearish, but it still has some green down here. It didn't close on its low. Generally, I want to see a lower high here just to make sure that the move up is over, because that's when you get in trends like this and you get a correction, the odds are we're going lower. But the key is timing that correction. When is it going to be over? Let's say you're looking at this at the far right at your thing. Okay, here's our correction. Is it over here, or are we going to go higher? And guess what? It goes higher. And then you get this next bar. Okay, is it over here, or are we going to go higher? Well, it's hard to know. So you either wait on a lower high or you wait on this channel to play out. So if you go short, it's probably enough room to get out there anyway. But are we done? No. Look, we're going much higher. And then you get another bar. Well, here we are. Now we've got an overshoot. Are we done to the upside now or no? And you can see we were pretty much done there. But how do you know which one of those is it? And it's really hard to know. And that's what we're going lower at some point. But the key is when. So it's all about your timing. And this is where people get screwed up. And so draw these short-term trends and at least follow the rules. Here you had an overshoot. Unfortunately, your signal bar is not very good, but you had an overshoot. So if you've got a good signal bar there, that way far away from the EMA, hey, there's some reason to argue for that trade now. But until we got the overshoot or we get a break of this channel and a new high, you got to be really, really careful. And you got to know your read is good. And that's what happens to people. Their read is good. They know we're going lower, but their timing is off. And I see that more than anything. And there's no real rule I can give you or tip I can give you. I mean, you can start to see it in the price action and get better clues, but you can still be wrong. So the only thing you can do is draw this short-term micro trend, this cayenne one here, and let it play out. Now, overshoot might be good enough. But sometimes you'll get an overshoot, then you'll get an equal distant break, and then it'll still run to a new high. Today's a very bearish day, so if you got a good signal bar here today, maybe you take that being that far away from the because it'll probably come back to the EMA, even if it is going to make a new high. So I hope that makes sense, and I hope that's clear. But that's what trips people up more than anything. And of course, now we're into 2:30, and that was our last trade of the day there. And so timing is the issue here for most people, because they know the rules for the most part. Unless you're real new, you may not know them yet. And but if you know the rules and you see the second entries, then it all comes down to timing on these corrections. And if you get a perfect setup at the key entry point, you probably have to take it. But if it's making multiple swings like this, then we're trending in the other way, and it's going to turn out to be your timing, and you got to make sure your timing's right. And that's why I didn't mark a short here until we got a reversal. I mean, you could have considered here because there is enough room back to the trend line, and if you're wrong and it bounces, you probably get out anyway. But I didn't even mark that one. You could argue for that one, but I didn't mark it. I think you're better to wait for the reversal, and then you know for sure, and look at it go, and it really takes off. So anyway, not much else we can say about today. And again, this is going to wrap up our week. Tomorrow's Friday, no chart lessons on Fridays, but there it is, folks. I mean, this is what you want to see as a day trader. I wish we could get days like this every day. What I'd love is just sat here and goes down one day, up the next, down. That'd be great. I'd be happy with that. Or it'd just sit there and go up every day. I'd be happy with that too. But if we could just get trends like that, you don't get trends like this all the time. You get a lot of this stuff right here with a trend in between occasionally. So when you get these kind of days, get a hold of one, try to get a runner and hold on for dear life. Get as much out of it as you can. Be more liberal with your runners and stuff on days like this, because you can see, and where are most of your run? I'm going to show you this. I can tell you right now, most of your good runners are going to be at a key entry point. I've already seen it, so I know, but I can tell you that any day. And where are your key entry points? Important, support, and resistance. Where did this big move right here start at? Right off that key entry point. And come to find out, there's a bigger key entry point there. We just don't know it yet. But it came right off that key entry point. You didn't even need this blue channel. You got the range, and you got the triple test and the negative bar, and that's where that big. Now, will you always get a runner? No, but a lot of times you will. Where did this big move originate? Right at the key entry point on a failed break out of this little congestion range, and right off that yellow key entry point. And then boom, look, it just keeps going. Really, I don't have it drawn on here, but really there's a spike in channel down through here. And there it is. And it's off that key entry point. Then we come up here. Where did this big nice move come from? Right off that green key entry point. Where did this big move start? Right off that green key entry point. Where did this one start? Same place. Where did this one start? On a break of that key entry point. Where did this big move come from? Right off that yellow key entry point. Where did this one come from? Right off on a failed break out of here, and close enough to say right off that yellow key entry point. This just came as a reversal. Where did this big move come from? Off of this key entry point right across here. You already had a little double top right there, and then it made a triple, and then it tested it again because there's a little double test right there. Went higher, came down, went back again. Key entry point. This move came off one, but you wouldn't have had it yet, but you could argue that it came off of this one on the failed breakout. Where did this big move, oops, didn't mean to do that. Where did this big move come from here? Right off the key entry point. Runs down. Where did the reversal come from? Right off the lower side of there. Of course, you're not going to try to buy this, but I'm just showing you in general where these moves come from. Where did this big move come from? Right off these lows down here. I mean, you can see this stuff every day, and if you learn to find these key entry points and be patient and follow the rules, especially on a trend day like this, that's where your money's going to come in. And you could get a runner on a bunch of these, more than normal. So anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.